In this overview, we will show you the discounted cash flow tool. We find the discounted cash flow tool on the research page under the value menu. I've loaded Microsoft and the initial calculations for it. You can see the DCF tool is very comprehensive. We start with the EBITDA or cash flow. We have it projected into the next 3 years, including a terminal growth rate beyond year 3. Any of the boxes that you see that have the up and down arrows, you can change the data, or you can just highlight the data and change it directly as well too. Things like tax rates, capital investment, tax shields, incremental working capital, these can all be changed. Other lines like discretionary cash flow, you can see that there's no arrows here, so those are calculations. You can adjust things like cost of capital, the interest-bearing debt levels, preferred shares if they exist, all in calculating the value per share. So if we do a few quick calculations, for example, if we look at the terminal growth rate and change it from 1.4% to only 0.4% long term, you can see our calculation drops quite dramatically. Conversely, if we went up to 2.4, there's a significant swing in there. So the model is very sensitive to something like terminal growth rate. Same is true for tax rates and especially cost of capital. So that's the discounted cash flow, fairly straightforward tool to use. It's really dependent upon the inputs that you're putting into the models.